Have you ever stared at a stock, thumb hovering over buy, and felt that little knot in your chest? That shouldn't I? Am I about to make a huge mistake feeling? Yeah, we've all been there. Let me tell you about Marcus. It's 1 a.m. His room's dark, just his face lit up by the phone. Green numbers, red numbers. A stock somebody dropped in the group chat 3 hours ago with a rocket emoji and the words, "Trust me." He's got 400 pounds, and his thumb is hovering over that exact same button. Buy. He doesn't really know what the company does. He knows it went up. He knows a guy, and he knows that feeling. The one whispering, "If you don't do this right now, you'll miss it forever." So he taps. Here's the thing, though. Marcus isn't dumb. He isn't reckless. He just skipped 7 tiny checks, 90 seconds each, that the calm, quietly rich people never skip. Especially number 3. Almost nobody checks number 3. So before your thumb ever hovers again, stick with me. We're about to make sure you never have to feel that knot again. Real talk. You've been Marcus. Maybe not at 1 a.m. Maybe it was payday. This one's different moment. A screenshot with rockets on it. You didn't research. You felt. And feeling is exactly how the market quietly empties your account. Because the company you're buying doesn't know you exist, and it is never going to love you back. So here's the deal. 7 checks. 7 questions Marcus should have asked. No finance degree, no spreadsheets, just you, protected from the version of you that buys on vibes. 1. Does this company actually make money? Is it famous? Is it trending? Does it earn more than it spends? That's profit. The bottom line. Marcus never looked. Turns out his company had never made a profit in its entire life. It was a story selling a dream, funded by people buying the dream. Hype is not a business model. Profit is. 2. How much does it owe? Borrowing is normal, but some companies are buried alive in debt. One bad year and the whole thing folds. You don't need the maths. Just ask. If this company hit a rough patch, does it have breathing room, or is it one storm from sinking? Marcus's pick was drowning in debt. He saw a logo and a chart. 3. The one you came for. Free cash flow. Plain English. A company can show a profit on paper and still have almost no real cash in the bank. Accounting lets you dress things up. Cash doesn't lie. Free cash flow is the actual money left over after the lights are paid for. This is the number serious investors live by, and beginners never even open. Why? Because it's boring. It's buried in a statement nobody scrolls to. There's no emoji for free cash flow, but a company swimming in real cash survives the bad years. A company without it survives on belief, and belief runs out. Marcus skipped it, obviously. It wasn't exciting. It was just true. 4. That stock that crashed 80% and feels like a steal? A low price isn't the same as cheap. Sometimes a price falls because the company is genuinely dying, and the market knows something you don't. Your brain locks onto the old high price and screams discount. That's a trap called anchoring, but nothing says it can't fall the rest of the way to zero. Cheap is about value, not about how far it dropped. 5. Watch who's heading for the exit. When the people running the company are quietly selling their own shares. Notice that. They know the business better than any group chat ever will, and it's public. The insiders leave footprints. Most people just never look down. 6. What stops someone copying this overnight? That protection, a brand, a network, something hard to replicate, is called a moat. A castle with no moat gets stormed. A company with no moat gets outcompeted and slowly bled dry. No moat, no mercy. 7. The brutal one. Can you explain how this company makes money in one plain sentence? If you can't, you're not investing. You're hoping, and hope is the most expensive word in the market. Here's the part nobody says out loud. You already knew Marcus was making a mistake. You felt it. The problem was never information. The problem is that buying a stock feels like buying a feeling. Belonging, hope, the thrill of being early. That's the gambler's script running in the background. And these 7 checks aren't really about maths. They're a 90-second pause between you and your worst impulse. So next time your thumb hovers over buy, don't fight the feeling. Just run the 7. Profit, debt, free cash flow, real value, who's selling, the moat, and the one-sentence test. Survives all 7? Maybe. Fails even 1? You just saved yourself from being Marcus at 1 a.m. because the goal was never to pick perfectly. It's to stop being the person the market is waiting for. Marcus learned that the hard way. You don't have to. There's a whole world of these money scripts running quietly under your decisions. And next, I want to show you the one that keeps people broke even when they're winning. Subscribe. I'll see you in that on.